Good evening, students. So, students, we are doing chapter 5, that is audit of items of financial statements. So, I think we have already learned substantial part of this chapter. We have understood how an auditor performs various audit procedures in respect of balance sheet captions, in respect of items of assets, and in respect of items of liabilities. We have focused upon audit procedures in case of companies, and specifically we have also understood disclosure requirements of Schedule 3 to Companies Act. So guys, always remember the audit procedure stated described in this chapter are applicable to any entity, and wherever there are references to Companies Act or where there are references to disclosure requirements of Schedule 3, these are of relevance in context of companies only. Okay. So today, students, we shall be doing profit and loss captions, statement of profit and loss. So what is the most important item in statement of profit and loss in context of companies? Yes, anyone who can tell me? On the credit side. On the credit side, which one of items is the most important? Yes, Tejaswin's sales. Yes, you are talking about sales. Any other response? Yes, any other response? Guys, you can send your responses on BOS mail. Yes, Sanya, revenue, that's better. Tejaswin, revenue from operations. So revenue from operations, what do we mean by revenue from operations, guys? Yes. Yes, Tejaswin. Pranav, what do we mean by revenue from operations? And I think you have gone through the requirements of Schedule 3 during all these 3 lectures, and you have opened up your modules, and you have understood, and you have tried to remember various requirements of Schedule 3 to the Companies Act, as I had advised you at the very outset of this chapter. Yes. Yes, you are right. Sanya is also right. Lalit Bora, yes. Operational activities. What? So revenue from operations basically means revenue which is generated from operating activity of a company. What is the main operating activity? Like say, if a company is engaged in, say, manufacturing of some product, say in manufacturing of paints, then this is its main activity, and all the sales which would be booked um, by the company, these would be reflected in sales, and consequently under this head, that is revenue from operations. So students, do you remember you have read in chapter 3 on audit risk? What does SA 315 has to state about risks relating to revenue? Yes. Do you remember something? No, no, Rathi Milani, no dividend received is not likely to be a main operating activity. Yes. Do you remember, guys, chapter 3? What does essay 315 state about risk of material misstatement in respect of revenues? No, no, Tejaswin, you are stating material misstatement in revenue from operation. Basically, what I am trying to ask uh, from you is whether risk of material misstatement is higher or lower in case of revenues. What does essay 315 state? Yes, yes, you are right. So risk of material misstatements in revenues is always higher as stated in essay 315. Okay. So therefore, it becomes very important for an auditor to verify revenues of an entity, or you can say revenues of a company, since we are specifically talking about companies. So how would you verify, how would you proceed to verify revenues of a company? Yes, general procedures which I told you at the outset. Say if you in the exams you forget everything, you have skipped this portion. So how would you attempt such type of question? Yes, which are the general procedures? We are coming to the specifics. Like first of all, what an auditor would see regarding revenue. What an auditor would verify in respect of revenue from operations, in respect of sales. Yes, nobody. Yes, yes, Tejaswin. Yes, Pranav, you are also right. But basically, one point, students, I had told you, this point is common in many areas, like internal control system in operation. So if you forget everything, do write this. Internal control system in operation regarding the sales. So if internal control system is satisfactory, the controls are operating effectively, then it is likely that revenues are properly stated. It is more likely that there is no overstatement on or understatement in revenues. So first step is verifying internal control system in operation. Okay, so if auditor by performing tests of controls, he gains satisfaction that internal control system is operating satisfactorily in respect of sales, then then obviously he can reduce the area of his substantive checking. Although he would be required to do substantive checking, but but he can reduce the area. Okay. So then first assertion in respect of sales students is in, and consequently in respect of profit and loss captions is occurrence. First of all, you would have to see whether the recorded sales have occurred or not. whether they have in fact taken place. Now, which are the audit procedures in this regard? Yes, now what you have already written, you would check sales invoices, confirmation, external confirmation, Pranav Natarajan, that's also correct. Say when you are sending external confirmation to trade receivables, this in fact uh, this in fact provides auditor with the evidence regarding occurrence of sales transactions, because the trade receivable balance is nothing but the net effect of sales bills and payments received from the party. So this gives you an evidence that sales recorded are genuine. These have in fact occurred and these are not fake. So obviously you would be checking invoices, and this would also provide you evidence. You can verify statutory returns like GST returns, like e-way bills, like e-invoices. Okay, such type of things. So guys, very simple things. Just think with an open mind from from a layman's perspective, and you would get the right answer. Okay. So occurrence. Ensure revenue is not overstated by performing following audit procedures. Now there could be a possibility that one invoice has been entered twice, or a cancelled sales invoice has been entered. So it may lead to overstatement of sales and overstatement of revenues. Okay, but if you verify statutory returns like GST returns, and sales are reconciled, sales appearing in books of accounts are reconciled with GST returns, then it's okay. Test checking few entries, obtaining confirmation from customers to ensure genuineness of sales transaction. It would give you an evidence that whether there are any fictitious customers and genuine sales have been recorded. Okay. So sometimes what the entities or companies may do, they, in order to increase their revenue, they may try to show unearned revenue as earned, like some advance has been received and they might book it as revenue just to inflate their sales. Okay. Yes, Sanya, you are asking how sequence of sales invoice would help. So sequence basically is again related to internal control. So obviously when the sales bills are issued, these are in proper sequence. Or if some bill is missing, then either it has been cancelled, or you would inquire about why this sequence is disturbed. Okay. And checking sales return with sales invoices. So all very general points. And second assertion is completeness. Now, what does completeness means? That nothing is left out. That all sales made during the period were recorded. There is no transaction of sales which needed to be recorded in sales account has not been recorded. Okay. So how you would ensure that? Which audit procedures you are going to perform? You would perform cutoff procedures to see that on a particular date, say as at year end, as at 31st March, all revenues which needed to be recognized have in fact been booked. Okay, it is not that some goods have been sent to the customer and these have been dispatched from the factory, but say these have not been billed. So these should be billed. Okay. And another important point is for the auditors to verify is to verify the credit notes issued after the accounting period. So students, what happens is sometimes companies, in order to inflate their sales, they inflate their sales near the year end and cancel out their sales by issuing credit note in the beginning of next year. Okay, so if such a thing is there, then the auditor has to verify it. And again, like GST return point, same GST return point is applicable in case of completeness. Review GST, tax and GST returns and ensure these are reconciled with the revenue reported in profit and loss account. And any relevant audit procedure, students, you can write, like check whether quantity is appearing in sale register and check reconciliation of total sales upon goods dispatched as per stock records. So what is the quantity under out section of the stock records? Obviously that should tally with your sales account, with the quantity in sales account, subject to reconciliations. Yes guys, is it clear? So now we are talking about assertions in respect of profit and loss items, in respect of statement of profit and loss. Okay. Now, Pranav, you are asking, can you write inspection for completeness? It should be relevant. Obviously, you just can't write inspection. You would have to write inspection of what? Okay, like say you are verifying GST returns. This is also a form of inspection. Going through some document, it is again an inspection. But here you have to specifically write that you would inspect GST returns from the GST portal and that the same are reconciled with the books of accounts and consequently with the revenue which is stated in the statement of profit and loss. And measurement. Now, measurement means that the amount at which sales needed to be recorded, it has been recorded as per required applicable accounting standards, general accounting practices. The amount recorded is correct. So how would you ensure that? Say in case of export sales, you would see the applicability of AS11. These have been converted at the required exchange rates in accordance with the requirements of AS11. And how revenue is recognized in accordance with the generally accepted accounting principle. Yes, like when risks and rewards have been transferred. So it depends upon the nature of the business of the client. And it also depends upon the accounting policy followed by the client. How does it recognize revenues? Okay. So that becomes very important for you to see what is the accounting policy followed by the company or the entity to recognize the revenue. and nonetheless related party transactions. So we already know, we have read in SA 550 also that related party transactions have to be carried out at an arm's length price. Okay, at the same distance, at the same rates with which the company or the entity would have entered with some third parties, because it may lead to overstatement or understatement of revenues. Okay. So that is also one of the audit procedures in respect of measurement. Measurement simply means that amount has been recorded correctly. It has been recorded correctly. Okay, so these are few situations, few circumstances are given. And next come disclosure, students. Now, like in case of balance sheet items, there are disclosure requirements in respect of profit and loss items also, in respect of statement of profit and loss also. So Schedule 3, Division 1 specifically requires a company to disclose following in respect of revenue, like revenue from the sale of products, revenue from the sale of services, and grants or donation received in case of Section 8 companies. Those companies which are engaged in charitable activities, and other operating revenues. Other operating revenues means which are not in the nature of sales, but which flow from the operating activity of the company. Okay, like say there is a company which is engaged in export of goods, and it also gets duty drawback from government, from customs, as part of the foreign trade policy. So obviously the duty drawback which the exporter company is getting, it would be shown as part of operating revenues, because it is because of the sales which are being undertaken by the company, that the company is getting some incentive, some benefit from the customs. Okay. Yes, Dipali, you are asking what is grants? Grants means some sort of assistance, like some bodies get grants from the government, like schools get grants from the government. So it is in this sense the word is used. Okay. So guys, you notice an important distinction here in Schedule 3 requirements relating to revenue from operations, that sales from products and sales from services have to be disclosed separately. This is a very important point, students. Now, what is sale from products and what is sales from services? Yes. Anybody who can give an example? What is sale of products? What is revenue from the sale of products? And what is revenue from the sale of services? Yes, guys. Yes, Ritika, Pranav, Sanya, Manoj Kumar Makwana. Yes. Oh, okay. That's all, Pranav. What you are writing is also correct. But like, to put it in a proper perspective, say there is a company which is, say, engaged in manufacturing activities, say manufacturing of some products, like say manufacturing of fabric. So it is making sales of fabrics. So fabric is a product. Now further assume that sometimes um, it also conducts job work on behalf of third parties. It means that some third parties send raw material to it, and it converts that raw material into fabric, and it raises labor bill. So what the company is doing? Yes. So what the company is doing? So the providing company is selling goods, and company is also providing services. So revenue from sale of products and revenue from the sales of services have to be disclosed separately. Guys, you are understanding what I'm trying to convey. So the kind of examples you guys are giving, these are very different. These are two independent activities. Like, uh, who has written, like sale of products like fruits and vegetables, Pranav, you are saying, and providing internet services. It can happen, but it is quite unlikely that somebody is internet service provider and is also trader of fruits and vegetables. So guys, the example of fabric which I have given to you, you have understood. Yes. Okay. Yes, Tejaswin, you are saying Reliance is example of this. Yes, I'm not denying that this can't happen. But for the point of view of understanding, you it is better if you keep the example which I have given. You keep this kind of example in your mind. Okay, because in the exams, the paper setter may try to confuse you with an item, with a description which includes product as well as service. Okay, like another example I'll give you. Say there is a company which is engaged in manufacturing of machinery. So the company itself is engaged in manufacturing of machinery. So machinery is a product, is the final product from which revenue will be generated. Okay, so sales from this product, from the sale of machinery, would be disclosed under the head revenue from operations, and bifurcation sale of products. Now suppose further that this company which is engaged in manufacturing of machinery, it is also repairing machinery received from third parties. So like, there are some customers to whom it is selling machinery, so they also send a machinery um, to this company for repair works. So the company is raising labor bill. So what the company is providing? The company is providing services. Yes, Ritika. Now you are correct. Yes. And in respect of a finance company, say in respect of a company whose main business is to give loans and advances, interest and other financial services have to be disclosed, because in case of a finance company, interest is their main income. They are in the business of providing loans, so their income is receiving interest on the loans advanced. Okay. And revenue under each head shall be disclosed separately by way of notes to accounts. To the extent applicable, brokerage and discount other than usual trade discount would be shown separately, and related party transactions, this we have already considered, these are also required to be disclosed. This is again schedule 3 requirement. Clear, guys? So revenue part is clear. How to verify sales, which audit procedures are performed by the auditor for verifying sales, what are the disclosure requirements of schedule 3, and one important procedure, students, we have left out. Say one thing is test of controls, and all these things which we have just discussed, like inspecting invoices, like tracing sale bills to dispatch register, these are all substantive procedures. So remember, students, when we had done audit procedures in chapter 4, we had talked about substantive analytical procedures also. We had talked about substantive analytical procedures also. Now, which substantive analytical procedures would be performed by the auditor in respect of sales? So simultaneously, students, we are also doing questions. We are not only learning, but we are also um, trying to engage our minds in answering questions. Yes, Manoj Makwana, ratio analysis. No, you have to write something, Manoj. What kind of ratio analysis? Obviously, you would be stating, making a trend analysis of the sales, uh, comparing sales month-wise, making a trend analysis, comparing sales with previous years to see whether there are any abnormal variations. Yes, operating ratios, yes, can be there. And or the auditor would be building an expectation around the sales depending upon that. Like say assume that if a company is engaged in manufacturing of one product only, and you are reasonably sure about the sales price of the company, average sales price, you can work out if it is possible to work out. So then you can build an expectation of the sales, and you can see whether there are any abnormal variations, or you can correlate it with the production capacity of the company in relation to a particular product. Okay. So these are all parts of substantive analytical procedures. So guys, when you read your paper in exams, so carefully read what is written in the question. Say one word can make a lot of difference. Say if the word substantive analytical procedures is stated in the question, then you have to write these substantive analytical procedures like of kind which we have discussed just now: trend analysis, building an expectation, okay, comparing sales with the previous years. Clear, guys? So if you in case if the question is asking from you substantive analytical procedures, and you are writing tracing entries in sales account with the sales bills, or checking dispatch register, then you may not get due credit. Yes, Pranav, you are right. Clear, guys? So these are um, some steps, some things which you have to be very careful in the exams. Most of the students, they know the answer, but they understand, but they do not know how what to write. Yes, Tejaswin, we shall be reading about essay 265 in coming chapter, that is chapter 7. Now, second part in schedule 3 is under income items is other income. Now, what is other income? Yes, what would be included in other income? Yes, students, make an intelligent guess. Say there is a company XYZ, a private limited. There is a company. It is engaged in manufacturing of fabric. So obviously, sale from the manufacturing of fabric would be shown under the head revenue from operations. Now, what would fall under the head other income? Yes, Ritika, you are right. Interest from investment. Yes. Interest received, dividend. Yes, right. Tejaswin, Manoj. Other than operating income. That's also right. Gain on sale of assets. That's also correct. So, guys, the point is, if you understand what a particular head conveys, then 50% of your job is done, because it would ensure that you would not write anything irrelevant in your answer. Now, all of you who are stating what is included in other income, so you know the contours of other income, that what is included in other income. So obviously, you would be writing points relating to interest on fixed deposit, relating to dividend received. So all these are correct and relevant points. Clear? Yes, yes, Manoj, you are right. It may differ from business to business, or the kind of investment which the company or the entity has made. Okay. So tell me, students, from again, without seeing from your module, just we take a simple example. Say the company had some surplus funds during the year, and the company has made a fixed deposit with the bank of, say, rupees 50 lakhs. And it has received interest on this rupees 50 lakhs during the year, say during year 23-24. Now you are auditing the accounts of the company for year 23-24. Now, which audit procedures you would perform to verify interest on fixed deposit? Very simple. First of all, keep in your mind what the concept is all about, and then try to frame audit procedures around it. So cramming is not going to work. Yes. And I have also told you in the past that in audit procedures questions, if you write any relevant point, you would get credit for it, provided it is relevant. Yes, occurrence is the first thing. Yes, inspection of bank statement. So obviously, first of all, you would ensure, you would see that um, that fixed deposit from which interest is received, okay, you would ask for its listing, and you would see that it is recorded in the books of accounts from the schedule, and then you would go to verify the interest figure. You can take a certificate from the bank, you can see it from the bank statement, or you can verify it from the income tax portal. Say you can verify it from form 26CS, because TDS would have been deducted by the bank while crediting interest in the account of the company. So again, general points, guys. So all these points are relevant. So whether the interest the which needed to be recorded as on 31st March, it has been recorded and nothing has been left out. Yes, Ritika, that's also correct. Recalculate the interest amount for its arithmetical accuracy. Say like the kind of example we had taken, the company may have, instead of one fixed deposit, the company may have made two fixed deposits, say one of 40 lakhs and one of 10 lakhs. And they may have recorded interest of rupees 40 lakhs in its statement of profit and loss, but they may have omitted to record interest on fixed deposit of rupees 10 lakh. So that it means that complete interest has not been recorded, which was required to be recorded. So the company may have made investments in the shares. It may have received some dividends. So dividends are recognized in the statement of profit and loss only when these three conditions are fulfilled. What are these three conditions? That the entity's right to receive payment of dividend is established. This is first condition. Second, that it is likely, it is probable that economic benefits associated with dividend will flow to the entity, that money would come, and the amount of dividend can be measured reliably. So all these three conditions have to be satisfied to recognize dividends in the statement of profit and loss. And say when the dividends are declared after the balance sheet date, then obviously companies are not making provision. These are disclosed separately in notes to accounts. Yes, B. Kiran Kumar, you are also correct. Comparing details with AIS and TIS on income tax website, that's also correct. So all these are all procedures relating to occurrence, completeness, and measurement. Like Ritika has said, verifying the arithmetical accuracy of interest calculation. Obtain a confirmation of interest income from the bank. Bank certificate, you can get a bank certificate. So what better proof can be there of the interest income than getting a bank certificate in respect of interest? Obtain a copy of Form 26AS. Okay. Similarly, in case of dividends, the dividends should be recognized only when these three conditions are fulfilled. Or say the entity may have invested in some mutual funds, or it had made some investment in other financial instruments, then gain or loss on their redemption has to be recognized. Okay. So it has to be ensured that it is recognized only when such units are redeemed. And there are disclosure requirements in respect of other income also. Now, other income shall be classified as interest income, dividend income, net gain or loss on sale of investments, other non-operating income. So this you have to remember, that interest has to be disclosed separately, dividend has to be disclosed separately, dividend income we are talking about, and net gain or loss on sale of investments, it is also to be disclosed separately. So on the credit side, on the income side, we are done with revenue from operations and other income. And besides, students, there is some additional information to be disclosed as additional regulatory information in respect of undisclosed income. Say it may so happen that there has been, say, some search or survey under Income Tax Act, and due to such search or survey carried out, the company has disclosed such some income or some, which was not previously disclosed. Okay. Then disclosure in respect of such income has to be made in the financial statements in notes to accounts. Clear? Then we come to expenses item, students, on the debit side. So like we have understood audit procedures relating to sales, similar are the procedures relating to purchases. So before we proceed further, guys, tell me from the very beginning how you would start in respect of audit procedures relating to purchases. Yes. So students, these are similar to what we have learned about sales. You can very well handle, you can very well tackle these without even referring to module. Yes, yes, all are correct. So confirmation to trade payables would provide evidence in respect of genuineness of purchases. It would show that purchases have in fact occurred. External confirmation from supplier. Yes, that's correct. And what else? Yes, Tejaswin, gate register can be checked. This obviously when again, it is part of the internal control system. So when goods are received in the premises of a company, obviously is some gate register or some form of gate register would be maintained at the entrance. Okay, so one can test check few descriptions in the gate register and correlate it with the various items, with the various purchase bills which the company has booked during the course of years. Okay. Yes. Any other procedures? Yes, guys, you can make 5-10 out of 5-10 of such procedures. Yes. Okay, first tell me about substantive analytical procedures in respect of purchases. First tell me about substantive analytical procedures in respect of purchases. Yes, goods received note, Manoj, and e-way bills, that's also correct. Now, first let us talk about substantive analytical procedures in respect of purchases. So similar to what we had learned in case of sales. Yes, Pranav, you are right. Like trend analysis, ratio analysis, like payable to turnover ratio, that's also correct. And guys, while writing substantive analytical procedures, do remember one more thing. Like two things you have already remembered: trend analysis, comparison with previous years, purchases in case of purchases, comparison with previous year sales in case of sales. One more thing always remember is category wise purchases or category wise sales. Like it would give you an additional point in the exams to write. Like obviously a product is manufactured generally not from one material. A number of materials would be used for for making a finished product. Like 3-4 components may have gone into the making of a product. So category wise purchases analysis could be done, can be done. So such points need to be remembered, need to be established in your minds. In exams we forget. So in paper, marks are given for the relevant points, and you don't have liberty of so much time to take 4 or 5 minutes, and just by thinking over, uh, you would some points would crop up in your minds. So obviously these should come like a flash of light. Okay, within a fraction of second. So when these will come, when you have remembered these things. So guys, that is why I am laying so much emphasis on remembering the things. Where students fail, they do not remember. Like most of you by now know that what are substantive analytical procedures. But if you do not remember, after 5-7 days, you won't be able to write even 3 or 4 substantive analytical procedures. You try this unless you remember. Okay. And another point is building an expectation around purchases and to see the reasons for variation. We had read in SA 520 analytical procedures that an auditor builds an expectation around various items in respect of which he is performing analytical procedures, and then he analyzes his variation in his expectation with what figure is recorded in the financial statements, and he tries to analyze the reasons for the variation. It is not that if there is some variation, then it is always something fishy. It can be possible that his expectation is unrealistic, or it can be possible that management has some genuine explanations to offer with regard to such variations. So, first of all, occurrence assertion that purchases recorded in the financial statements have actually occurred, that goods have been actually purchased and actually received in the factory. So, if you purchase something, you receive. If you have purchased some material, if you have purchased some component, if you have purchased some product, then you should have received that product in your premises. Okay. So this can be done by sending confirmation to vendors, to suppliers. So it would provide evidence whether there are any fictitious or fake vendors, fake suppliers. Checking of gate register, goods received register at the factory gate inward register. So it can be called by any name. Whether quality inspection of goods was done, whether a goods receipt note was prepared. So when the goods are received, so obviously some chap in the factory would be preparing a goods received note to see whether these conform to the order placed, whether the quantity is as per the order. Okay. Whether purchase invoice was approved, whether stock record has been updated. So obviously on purchases, the stocks would be received and it would be added in stock inward. Okay. And similar to in case of sales, like we had discussed, that revenue is recognized when risk and rewards have been transferred. So in case of purchases, risk and rewards should be transferred to the entity. So whether the purchase is on FOB basis or CIF basis. Yes, guys, you know the meaning of FOB and CIF. Purchase invoice should be in the name of the entity. So that's quite obvious. Say if the purchase invoice is not in the name of the entity which you are auditing, it is in name of its sister concern, say, or it's in name of another concern, then how you can enter that purchase bill in entity's books of accounts? So in such case, occurrence assertion is not satisfied. Occurrence assertion is violated. Yes, students, you know the meaning of FOB and CIF? Yes, Tejaswin, free on board and CIF is cost insurance freight. So free on board, say I am a company and engaged in export business. So I am sending my goods FOB Mumbai. So it means that that my responsibility as a seller is only till Mumbai port. Okay, thereafter buyer assumes responsibility. Okay, and CF, it means that I am responsible for delivering the goods at the till the say port of the buyer. Yes, yes, Manoj, I have already explained. And you can verify um, GST portal. Same common points like in case of sales. And input tax component ITC should not be booked in the purchase account. It should be separately booked in the account, in a separate account. And like in case of revenue, similarly purchases from related parties, the auditor needs to verify, he needs to perform procedures whether prior approvals are there in respect of purchases from related parties, and these purchases are in fact genuine and have been carried out at arm's length prices. Yes, yes, Tejaswin, it is in customs. Yes, these are Incoterms. FOB and CIF, these are Incoterms, more commonly used in export-import trade. Okay. So completeness, guys, how you would verify that all purchases have been recorded? All purchases which needed to have been recorded have in fact been recorded in the financial statements. So obviously, you can verify uh, goods inward register, and you can see that goods received in say last 5-7 days or last 10 days, whether purchases corresponding to these have been booked in the financial statements. Obtain written representation from the management that that is a general point, that all purchases have been completely recorded. Okay. And performing analytical procedures like making some sort of ratio analysis. One thing is consumption analysis, and one thing is stock composition analysis. Now, consumption analysis means seeing the raw material consumption during a year under audit and comparing it with previous year's consumption. Okay. So it would, if there are any abnormal variations, it may provide some evidence on this assertion. And stock composition analysis, meaning it means that um how much raw material stock is there as a percentage to total stocks. So what is the percentage of raw material stock in the total stock? and you can compare it across the years, whether there are any abnormal variations or not. So these are two separate terms. One is consumption analysis and one is stock composition analysis. So stock composition means uh, carrying out a ratio analysis of raw material stock divided by total stocks and comparing it with the previous years, okay, across the years. And disclosures, what are the disclosure requirements regarding schedule 3 in respect of purchases? So schedule 3 students, as you can recall that purchases of stock in trade have to be specifically disclosed in the statement of profit and loss account. In the statement of profit and loss, if you recall part 2 of the schedule 3, so in the expenditure side, it is specifically stated purchases of stock in trade. It means purchases of goods which have been acquired for trading. So these have to be shown separately. Apart from raw material purchases, because that would be shown as part of raw material consumption. Okay. And changes in inventories of finished goods, work in progress and stock in trade. This is again on the face of statement of profit and loss. If you are able to recall part 2 of the schedule 3, and transactions with related parties. So same as in case of sales, similar requirement was also there in case of revenue. So similar requirement is also in case of purchases. Yes, guys. So I think at least sales and purchase, this should get established in your minds right now, right here, right in this class. Yes. Has it got established in your mind, students? Yes. Okay. And now we come to certain expenses like employee benefit expenses. Now, what is included under employee benefit expenses? First of all, tell me what is your point of view? What is your opinion that which expenditure are booked under employee benefit expenses in the financial statements of a company? Yes. Anyone? Yes, guys, you can send your responses on BOS mail. Just from your common sense point of view, you would find that what you are thinking logically, what you are thinking from your own common sense, that correlates with what is written in your module. Yes. Bonus, ex gratia, PF, ASI, Sahu, Amit, Biswas, Ritika, you are writing. But the most important thing which you are omitting, what is the thing which you are omitting from the employee benefit expenses? what do employee benefit expenses convey basically? First of all, tell me. Yes, Sanya, salary and wages. All other things, students, would flow from salary and wages paid to employees. So if you forget to write salary and wages, then what you are writing? Then what is your understanding? So PF would be applicable on salary, ESI would be applicable on wages, other benefits would flow from salary and wages. That is the primary thing. Gratuity, bonus, all these things would flow from the salary and wages at the first place. So how would you verify occurrence assertion in respect of employee benefit expenses? Now, what would occurrence assertion in respect of employee benefit expenses mean? It means that these expenses have in fact been incurred, that money has actually been paid on account of salary and wages. No, Pranav, you are saying verify the whether the relevant expenses have been recorded, but I am trying to ask from you is how would you ensure that these have in fact that such expenses have in fact taken place? Like in case of purchases, you were writing that we would send confirmation to suppliers. So what would you verify to see that these expenses have in fact occurred, these have in fact taken place? Yes. Yes, Ritika, yes. So you would be verifying payroll register because to see that there are no fictitious employees. So how you would ensure that there are no fictitious employees? Now, obviously, you can ask for the ID proofs of the employees on a sample basis to see that no fictitious employees have been booked. You can ask for the bank details of the employees. Okay. To ensure that there are no fictitious, or which we in auditing language say ghost employees. Ghost means fictitious, ghost employees, dummy employees. Okay. So audit procedures in respect of testing various assertions um, relating to employee benefit expenses, like the one which we have discussed. Obtain a list of employees as at the period end, along with a monthly movement split between new hires, leavers, and continuing employees. See the appointment letters of the employees. Okay. So obtain the salary register and ensure that salary and wages have been booked for all the 12 months. So it would ensure completeness. Even if the salary has not been paid for a month, say for the month of March, then ensure that adequate provision has been made in the books of accounts. Okay. And all these contributions employee contributions for PF, ESI in accordance with their respective legislations. These can be checked. You can make an overall test by applying the PF rate at which deduction is to be made to the wages, to the salaries. So you can make an overall reasonability test. You can perform an analysis and performing analytical procedures, comparing with the previous years, comparing with the similar industry. This can also be one of the points in analytical procedures. Okay, students. And required disclosures under Schedule 3 are employee benefit expenses showing salaries and wages, contribution to provident and other funds, employee stock option schemes or employee stock purchase schemes, and staff welfare expenses. So these are legal disclosure requirements as per Part 2 of the Schedule 3 to Companies Act. Okay. So another important item in statement of profit and loss is depreciation and amortization. Now, what is difference between depreciation and amortization? Yes, come on quickly. What is difference between depreciation and amortization? Accounting concept. Yes, all of you are writing relevant points. Ritika, Amit, Tejaswin. Yes, depreciation and amortization. It is one of the important item of the financial statements of a company. Yes, Pranav, you are right. Depreciation for PPE for tangible items and amortization is a term used for intangible items. Okay. And students, probably I had told you previously too that where the useful life of various assets are given in Companies Act. Yes, can anybody tell me? Are the useful lives of various assets given in the Companies Act? Where these are given? Yes, Tejaswin, yes, you remember Schedule 2. It is Schedule 2. Remember, guys, this is very important. It is not Schedule 3. It is not Schedule 3. Remember Schedule 2. And Tejaswin, when you write 2, write it in Roman. It is Schedule 2, like it is Schedule 3. So 3 is also Schedule 3. It is like this. It is not in Arabic numeral. It is not 3. Okay. So again, tell me generally, students, what would you verify? Which procedures you would perform? Which attributes, which features you would check while verifying depreciation and amortization? General points. Yes, quickly. Very simple. You have read AS10. You have read accounting standard on intangible assets. Just tell me in general terms which attributes, which features would you verify while verifying depreciation and amortization appearing in the financial statements of a company? Yes, life of assets is right, Ritika. So Schedule 2, Ritika, it prescribes lives, useful lives of various assets, like for factory buildings of certain kinds, it is saying 30 years. Other buildings, it is stating 60 years. For general rate applicable, general useful life applicable to plant and machinery is 15 years. Okay. Yes, useful lives of assets. Yes, accounting policy. Accounting policy adopted by the management, and see whether the accounting policy is applied consistently on a year-to-year basis. Method of charging depreciation, like which method is used, like straight line method or WDV. Yes, depreciation needed or not for that asset. Yes, that's also true. It means what Ritika is trying to convey is that whether the asset was in at first place, it has been capitalized, whether it needed to be capitalized. Now, this point is also important to check, because that may, the item which has been capitalized, it may have been required to be written off to revenue account. It may need to be charged as an expense. Yes, depreciation method is same every year or not. That's also correct. So sometimes this kind of general question can come. Probably it has come, I think it has come once. So same, the auditor needs to consider the following attributes. Attributes means features, qualities, while verifying for depreciation and amortization expenses. Now obtain the understanding of entities accounting policy relating to depreciation and amortization. And students, like, say if in the question both the words are used, depreciation and amortization, so you would take care while writing answer to state about depreciation and amortization. Just do not forget amortization. So see what is written in the question. If only depreciation is asked, then write only about depreciation. If both things are asked, then write about both the things. So students, these are the kind of silly mistakes which students in fact make. Ensure the company policy for charging depreciation and amortization is in accordance with the relevant provisions of Companies Act or the applicable accounting standards. Accounting policies applied consistently on a year-to-year basis. Calculation of depreciation. Whether depreciation and amortization charges are valid. It means that in fact these needed to be recorded. Probably the point that Ritika has made. Depreciation and amortization charges are accurately calculated. So accuracy assertion, whether the depreciation and amortization charges are recorded in appropriate period. So these are different attributes which an auditor needs to verify. So similarly, different audit procedures you can make, like, so these are similar to what we have read. What attributes, what features we have just now read. Obtain an understanding of entities process of charging depreciation and amortization. Go through fixed asset register. Now, like we were discussing, that there is always a risk that some item which has been capitalized, in fact was not required to be capitalized, or reverse could also be the case. Okay, so auditor can take a sample and see whether capitalization has been properly done or not. Select a sample of assets from the fixed asset registers and verify the rates of depreciation and depreciation calculation. Obviously, when you are verifying depreciation, you would be checking that depreciation has been calculated accurately. And intangible assets, these are properly amortized over their period. And another thing is important, students, ensure depreciation is charged on the assets from the date when it is ready to use and not from the date of actual usage. So under Companies Act, the depreciation has to be charged from the date when the asset is ready for use, not from the actual date of use, like which you have read in Income Tax Act. Actual date of use when the asset is put into use. Okay, so if the asset is ready to use, it has been installed, but say it would be used after 2 months, but it is ready for use. It is installed and all things have been completed. Then depreciation would be charged from that date. Okay. Ensure depreciation on revalued amount has been properly accounted for. Yes, this Tejaswini is also writing. And what are the required disclosures as per Schedule 3 in respect of depreciation and amortization? These are the required disclosures. Accounting policy for depreciation and amortization. Useful life of assets as per Schedule 2. Look, we were recalling Schedule 2, we were remembering, and it has come. Schedule 2. So you can't say, sir, this is out of syllabus. Schedule 2 is nowhere written in our module. It is written. Residual value of assets, depreciation method. Okay. Then after depreciation, students, we come to other expenses. Other expenses. So other bulk of expenses which form part of statement of profit and loss, like which are in the nature of administrative expenses, like rent, like machinery repair, like building repair, like say commission, like say insurance, traveling expenses, conveyance expenses. So obviously, you can write audit procedures in relation to that. But if I were to take these expenses in a combined manner, and if I were to ask from you that which features, which points would you consider while verifying, uh, say rent, machinery repair expenses, and like that. Not one specific expense, but these kind of administrative expenses. Which features, which points you would keep in mind while verifying such expenditure? Again, very simple, students. Very common sense point of view. Take a common sense point of view and tell me which points you would keep in mind while verifying such expenditure. Now, your point should not be in relation to one specific expenditure, but these should be generally stated. Yes, yes, guys. Any idea? what you would consider? Yes, anyone without seeing from your module. Say you are part of an engagement team. You go to a client, okay, and your senior has asked to verify such expenditure like rent, like machinery expenses. There are some 10, 15 items which are appearing in the financial statements of the company. So which general points which you would keep in mind? No, no. Okay, that's correct. Ritika, for rent, you would see rent agreement. For commission, you would see bills. Okay, for insurance, you would see the insurance policy, and you would see the uh, related documents. But what I am trying to ask is which journal points, which features you would keep in mind while carrying out such an exercise? Yes, Vismita, you are right. Whether expenses relate to business or not, this is one of the points. So there are 5, 7 such type of considerations which you have to keep in mind. So which are those considerations? In fact, this question, this damn simple question, has once come in your exams, and I am pretty sure that most of students would have answered such type of questions wrongly because nobody had imagined that that such a question would stare them in their exams. Yes, Amit, expenses are in relation to business. This is one point. And what about others? What about other points? Yes, Dilip, you are right. They should relate to current period. So that is an while verifying expenses, you would keep in mind that these relate to the financial year under consideration. And Ritika, what you are trying to say, I fail to understand. We will see that separate entity is not harmed. What is the meaning of that? Yes, Dilip, you are right. That expenses relate to current period. They are in the name of the entity. What else? Yes, it can be there. Yes, Ritika, yes, this point is correct. That ex expenditures which have been booked in the statement of profit and loss, these should be of revenue in nature. This point is also correct. So far, 3 points have come from your side. That expenditure should relate to current period. It should be for business purpose, and it should be of revenue nature. Yes, Tejaswin, it is also correct. Expenses are recorded in correct head to which it pertains. Classification is proper. That is also correct. Yes, expenditures are made with the prior approvals. So expenditures are supported with proper documentation. So these are the various attributes which you would keep in mind while verifying expenditures. So students, can you imagine that this question came in exams carrying 4 marks? So how simple it was, but still, as I have told you, I am pretty sure that most of students would have attempted wrongly because at first sight they would not have been able to visualize what is the requirement of the question, what is in fact to be written. Okay. Yes, Tejaswin, what you are writing, you are saying, can I write to check for GST paid on such expenses? Yes, it can be. Okay, students. And for audit procedures relating to each of the expenses, so I am not wasting time on this because these are of very general nature. Like for rent, you would see rent agreement. Rent has been booked for 12 months. Okay. Agreement is in the name of entity. Similarly, power and fuel expenses, whether these have been booked for 12 months, you would see electricity bills. So obviously, you can even if you not all expenses are written here, if some expenses come in the exam, you can make out your own procedures and write. So we'll take a break of 5 minutes, students, here, and we'll come back after 5 minutes. Yes, break for 5 minutes, Manish. Yes, welcome back, students. So, students, as you already know that there are certain additional regulatory informations which are required to be given by company management uh, in accordance with requirements of Schedule 3 to Companies Act. So, in continuation with such information, there is certain additional information which is to be provided by the management in respect of CSR expenditure, corporate social responsibility expenditure. So you remember, students, provisions of Companies Act regarding CSR? You have read in your company law classes? Which section deals with it? And what is the main provision? Anybody who remembers it? Drop a mail. Tejaswin, you are writing it is not completed. Okay. So, under provisions of Companies Act 2013, students, certain companies which meet certain criteria like turnover criteria or net profit criteria or net profit criteria. Say one of the criteria is that if the net profit of the company during preceding financial year is rupees 5 crore or more. Okay. And there are similarly there are prescribed requirements for turnover and for net worth also. So if a company meets such criteria, then the company has to mandatorily incur a CSR expenditure, which is known as corporate social responsibility expenditure, at the rate of 2% of the average net profits of the last 3 years. Okay. Yes, Sanya, section 135, you are right. So it is in the nature of paying back to the society. Okay, Vismita is writing correctly. So whatever the profits you are earning as a company, as a corporate, so there is some responsibility cast upon you as a company to spend some money which is prescribed in the Companies Act on towards filling corporate social responsibility on some socially desirable causes like for environment protection, like for helping poor or destitute people, so such kind of things. Okay. Yes, Ritika, you are correct. So when a company has to incur corporate social responsibility expenditure, which is called as CSR expenditure, under section 135 of Companies Act, then following things shall be disclosed with regard to CSR activities. Again, this is a Schedule 3 requirement. So simply it is a legal provision you have to remember. So that's why I was insisting that first do Schedule 3. Okay. So amount required to be spent by the company during the year, which was required to be spent by the company during the year under law provisions. Under section 135. And amount of expenditure incurred. In fact, the amount which was actually incurred, whether there was a shortfall, then the management has to write the shortfall at the end of the year. Total of previous year's shortfall, reason why there is a shortfall, and nature of CSR activities undertaken. What kind of activities have been undertaken by the company? Like say, if the company has spent money on some environmental protection activity, then they would have to write. Okay. Or if they have spent the money through some agency and not their own, then they have to state. Okay. So details of related party transaction. Now in CSR expenditure also there can be related party transaction, like there could be payment to a trust which is controlled by the company. Okay. So such type of disclosures are necessary and are in accordance with the requirement of Schedule 3. So the auditor has to see whether such disclosures have been made or not. Details of cryptocurrency. So in respect of cryptocurrency also, these details have to be provided, like what is the profit or loss made on transactions involving crypto, amount of currency held as at reporting date. So these are again Schedule 3 requirements, which you have to remember. Okay. So besides this, students, there are some other requirements also which we have not covered. Yes. One such requirement is, there are three more such requirements. One such requirement is disclosure of ratios. No, this is Tejaswin. Crypto does not, RBI Reserve Bank of India does not provide a legal backing to crypto. But trading takes place in respect of crypto. It is not money as is the normal currency. So it is a kind of virtual asset. It is a digital asset. Okay. So it is not a cash or cash equivalent. It is a digital asset. So it is being regulated. Okay. So disclosure of ratios. These ratios, friends, this question has come in just last exams. Probably in September 24 exams, I think this question had come, that mention any 2-3 ratios which are to be disclosed in accordance with the requirements of Schedule 3, and what disclosures are required to be made by the company in respect of such ratios. Okay. So you have to remember the names of such ratios. An MCQ can come. Current ratio, debt equity ratio, this you are all studying in your FM. So current ratio is current assets upon current liabilities, inventory turnover ratio, return on equity ratio, trade receivable turnover ratio, trade payable turnover ratio. And important point, students, which you have to remember is that the company, besides stating these ratios, the company shall explain the items included in the numerator and denominator for computing the above ratios. So the company would not only calculate these ratios in the financial statements, and would also state that what is included in the numerator and denominator. It means that how I am calculating current ratio, that I am calculating current ratio by current assets upon current liabilities. So I would have to write that in the notes to accounts. Okay. Similarly, how I am calculating inventory turnover ratio? Cost of goods sold upon average inventory. So some entity may be adopting some different formula. So that is why this requirement is there. So that these are not misleading. And a sort of transparency is there. Further, now this point is again, students, I am telling you, this is important to remember. Further explanation shall be provided for any change in the ratio by more than 25% as compared to the preceding year. So if there is a change in ratio as compared to preceding year by more than 25%, then explanation shall be provided then that why the ratio has changed by more than 25%. Okay. So the names of ratio you have to remember, and MCQ can come. So like some ratio is given which is not part of this list. And this requirement you have to learn. Clear, students? Then one more information is detail of Benami properties held. So students, you have an understanding of what do we mean by Benami properties? So there is a complete act. We do not have to go through all these nitty-gritty. Basically, you have to understand that this information is required to be disclosed by the company in its financial statements. There is an act, there is a law, Benami Transactions Prohibition Act. So just keep in your mind what a Benami transaction is, first of all. And remember these disclosure requirements. Yes. What is a Benami property or Benami transaction? Not legal meaning, just if you have any understanding of it, a layman's understanding. Yes, right, Tejaswin. Like somebody has purchased a property, purchased some asset, but it is in the name of somebody else. Real beneficiary is Mr. X, but the property is in the name of Mr. Y, like who may be employee of Mr. X. So there is a complete legislation, Benami Transactions Prohibition Act, and in fact, this whole legislation was revamped in 2016. Okay. So if there are some proceedings under this act, under Benami Transactions Prohibition Act, some proceedings have been initiated by the statutory authorities, then company shall disclose the following: details of such property, amount, detail of beneficiary. If property is in the books, then where it is stated. If property is not in the books, then the facts shall be stated with reasons. Whether there are proceedings against the company under this law as a abettor or as a transferor. Abettor means one who has promoted, and nature of proceeding and status. So these disclosure requirements you have to remember. And relationship with struck off companies. So there is a provision in Companies Act that name of the company of a company can be written off, can be struck off by the registrar of the companies under certain circumstances in under section 248 of the Companies Act. So if the name of the company has been struck off and there are some transactions with the company whose name has been struck off, then following disclosure requirement is there. Okay, so this disclosure requirement you have to remember. And nothing more than that. So there is another topic of students, provisions and contingent liabilities. Now, which also constitutes one of the important items in the financial statements of a company. Now, can you tell me the difference between a liability, a provision, and a contingent liability? Yes, you have read AS 29. So this whole topic is in the context of AS 29. So if you are well aware of requirements of AS 29, then you would find that whatever is written in these 2-3 pages, it is exactly copied from the requirements of AS 29. So remember, students, at the very first lecture of this chapter, I told you that it contains requirements of accounting standards also at some places. It is a mixture of 4 things I told you. Now we have seen the requirements of AS 10. We have seen the requirements of AS 26. We have seen the requirements of now seeing the requirements of AS 29. We have seen the requirements of AS 2. Yes. Anybody else? What is the difference between liability? First of all, tell me what is the difference between liability and a provision? What is your understanding of difference between liability and a provision? Yes, Sahu, you are writing liabilities which come unexpectedly. That's not a proper way to write. Yes, Pranav, you seem to be right. Provision is a liability of uncertain amount. Yes, but can be ascertained using substantial degree of estimation. So when we make provisions, it involves a lot of estimation. It involves a substantial degree of estimation. Its measurement can be done by making a substantial degree of estimation. In contrast to liabilities, whose amount is already ascertained. Like if you purchase some goods, then the amount which is recorded as liability under trade payables, it is already measured. You already know what is required to be recorded. But in case of provisions, the distinguishing feature of provision is that although it is a liability, it can be measured by using a substantial degree of estimation. So this is the distinguishing point of a provision vis-a-vis a liability. Like, for example, like you are a company, say, which is engaged in manufacturing of some products, and you also provide warranties to your customers on the products which you are selling. Okay, so for certain defects or for certain other things, say, and by experience you know that some um, customers use this warranty, and some products come back to you under this warranty. So obviously, by your experience, by the past experience, the company knows that a liability exists, which would involve outflow of money. Okay, but the point is whether this liability um, can be measured simply accurately. The answer is no. It has to be measured on an estimation basis, on an estimated basis, depending upon past experience or taking the advice of the expert. So this is the distinguishing feature of a liability from a provision. Clear, guys? So a provision is a liability which can be measured by using a substantial degree of estimation. So when a provision is recognized, now these are the circumstances when a provision is recognized as per AS 29. Now these are all accounting standard requirements. Okay. So the entity has a present legal obligation as a result of past event, legal or constructive. Now, what does this mean, legal or constructive? Yes, anyone? What is the difference between legal present obligation or constructive present obligation? Yes, anyone, students? On your BOS mails, let us see if you can answer this or not. Yes, constructive means deemed. Yes, Vismita, you are nearing the correct. Yes, Dilip, old practice, that is also correct. Legal means which is mandatorily required under the law, or and constructive means which is based on the past experiences. Okay. So like in this warranty example, the company knows by the past experience. Okay. So when an entity has a present obligation, legal or constructive, as a result of some past event, so it has sold some goods, and in the past, and some present obligation is expected to arise, and it is probable that it would involve outflow of economic resources, means it would involve outflow of money to settle this obligation which has arisen out of these past events, this present obligation which has arisen out of the past events, and a reliable estimate can be made amount can be made of the amount of the obligation. Now, this is also necessary condition that it is possible to make a reliable estimate, because if we are not in a position to make a reliable estimate, then how the amount of provision is going to be recorded? Now, this is one of the essential conditions to be met. In absence of it, the provision cannot be recorded, it can't be measured. Okay. So if the above conditions are not met, no provision is recognized. So these conditions have to be satisfied to recognize a present obligation arising out of past events as a provision. Clear? And what is a contingent liability? Contingent liability means when a present obligation has arisen from the past events but is not recognized because of these two things, because it is not possible to measure it reliably, or it is not probable that it would involve outflow of money, it would involve outflow of economic resources, economic benefits, or it can, a contingent liability is a possible obligation that arises from past events but whose existence would be confirmed by occurrence of one or more uns, uncertain future events. It means that present obligation is in fact is dependent upon the occurrence or non-occurrence of some future events which about which we are not sure. So then it is disclosed as a contingent liability. And remember, contingent liability is always disclosed. Contingent liability is disclosed, provision is recorded. Okay. Like, for example, suppose there is some court case going against a company, and as on year end, the lawyers of the company advise that, say, that liability is not likely to arise, going by the past precedents. So the company, what the company would be doing? It would be making disclosure in the form of contingent liabilities. Say, but next year some new developments have taken place, or some new rulings have come, and now the lawyers of the company advise that, look, now it is likely that you would have to incur some liability. Okay, then in such a case, provision would be required to be made, because now there is some present obligation arising out of past events and which involves outflow of economic resources, and it is possible to measure it. So guys, this is the basic difference between a liability, a provision, and contingent liability. Always remember the basic difference in their nature. And once you have understood this concept, and I'm pretty sure you have already read about it in AS 29, so you can frame audit procedures. So how would you verify um, provisions, say, and contingent liabilities? Which audit procedures you would perform? Yes, students. Just do not see from your module, do not refer from your module, just write by applying your own mind. Yes, anyone? Yes, Tejaswin, you are sitting oblique, check the obligation whether it exists. Yes, that is also a correct procedures. A number of procedures can be written here. Yes, guys. Now you see some provisions made in the financial statements. What is the first thing that you would do? So we start from the scratch. We start from the beginning. You see some provisions are there in the financial statements, in the balance sheet. What is the first thing you will do? So first thing you would do is obtain the schedule of provisions and compare them with the balances in the books of accounts, balances in the general ledger. And then you would see the basis of making provision, like agreements with the customers to verify warranty commitments, or or verifying documentation relating to claims involving the entity, legal claims, the matters which are in litigation. Only then you would be able to verify whether the provision in fact exists or not. So first thing is existence, whether the provision exists or not. Okay. And if it exists, then you would have to perform procedures that it has been correctly valued, that its calculation is proper. Like say if some expert has been engaged by the company for its calculation, then how you are going to check the work of that expert? So the same things which we have read in chapter 4, sorry, audit evidence, essay 500. So same things, evaluate the competence, capabilities, and objectivity of expert. So remember such things, students. Obtain understanding of work of that expert, which type of work has been performed, and obviously you would make a sample check on the work, whether the work performed by the expert is accurate or not. So these are all kind of audit procedures which would be performed by the auditor while verifying provisions. And similarly, the same can be written about contingent liabilities. And there are disclosure requirements in respect of provisions as well as in case of contingent liabilities in Schedule 3, Part 1, which you have to remember. So long-term provisions, short-term provisions, amount shall be classified as provision for employee benefits and other provisions. Similarly, short-term provisions are also to be classified as provision for employee benefits and others, specify nature. Now there can be different type of provisions. So the management would be writing separate heads which denote the nature of the provision. Okay. And contingent liabilities. So contingent liabilities shall be classified as under like guarantees, uncalled liability on shares, other money for which company is liable, claims against a company not acknowledged as debts. So these are disclosure requirements of Schedule 3. Besides, requirements of AS 29 have also to be followed. So what are the disclosure requirements of AS 29? For each class of provision, an enterprise shall disclose carrying amount at the beginning and end of the period, additional provision made, amounts used, incurred and charged against provision. So such type of disclosures which are listed in requirements of AS 29, these have to be disclosed. So these you have already read in uh, in AS29. Yes, guys. Is it clear? So, guys, one more thing that we have broadly covered this chapter, and in last class of this lecture, which falls on Thursday, that is day after tomorrow, we shall be doing MCQs, descriptive type of questions, and case studies based upon this chapter. So it would be a thorough revision of this chapter, what you have understood. So my request to you is that if you find it convenient, do just once go through this chapter, once go through the contents of this chapter, so that you can make most of it when we revise this chapter on Thursday. Okay. So let us do some questions today itself, students. And please do not see the answers. Please do not see the answers. Now see this question. Test your understanding 3. What you would write in the answer to this question? Various ratios of current and preceding year are disclosed in financial statements of a company. Yes, cash and cash equivalents, Tejaswin will take on Thursday. Now let us quickly do this. It would take only 10 minutes, 10-15 minutes. So we'll first take up cash and cash equivalents, and then we'll be doing MCQs, descriptive, and case studies. So I will try to select 2-3 case studies solely based upon this chapter, chapter 5. Yes, various ratios of current year and preceding year are disclosed in financial statements of a company in accordance with requirements of Schedule 3 of Companies Act. Discuss requirement of law in this regard. Do not list out names of ratios. Now it is given in the question itself that you do not have to write the names of the ratios. So what additionally you have to write? Yes, only one answer. What about others? Yes, only one of you has answered. Students, we have just done it right now. Come on. Certain ratios like we have discussed are to be disclosed by the management in its financial statements. So the question asks you to state not the names of those ratios, but to state what additional information is to be given in respect of such ratios. Yes, Dilip, you are right. Give explanation about numerator and denominator of ratios. Amit, yes, you are also right. There is one more point. So in papers, you would be getting marks on the basis of relevant correct points answered by you. Yes, Dilip. Yes, now you are right. Give explanation about reasons if the ratio have changed by more than 25% as compared to preceding year. So both things have to be given. Okay. Now see, test your understanding 4. Very simple. Yes, Tejaswin, your answer is correct. Yes, see question number 4. Very simple, students. We have done it twice or thrice today. Yes, absolutely right, Tejaswin. Like performing trend analysis, comparing sales with previous years, building expectations and checking variations, making an analysis of category wise sales. Students, I have repeated it so many times. Like by now, it should have got ingrained in your minds. Yes. So yes, test your understanding 5. This topic also we have touched today. Test your understanding 5. Yes, guys. No, no, Vismita, you have okay. You are answering probably of substantive analytical procedures. Okay. Yes, yes, you are right. No, the company's policy is not correct, and depreciation should be charged from the date when the asset is uh, was available for use. It was when it was ready for use. Yes, Dilip, you are also right. Tejaswin, you are also right. Yes, Ritika, you are also correct. Pranav is also right. Okay. Yes, guys, if you want to ask anything, uh, you can ask on Zoom. Manishi, you can unmute if some students. Okay. Yes, yes. Yes, guys, if you want to raise some query, you can ask. Yes, any query, students. Anyway, we will be doing as I told you, we will be doing a lot of questions, lot of MCQs relating to this chapter, descriptive questions, and at least 2 3 case studies. Tejaswin, I am simultaneously explaining to you how to write answers in the question, in the exams. So this is not a separate topic. I am simultaneously I am telling you how to write the answers. Simultaneously, I have been stressing you that you have to remember, and you have not to go by the length of your answer. Just write correct relevant points and say for a 4 mark question, 2 paras could be sufficient. Or if say question is of 5 marks, then 3 paras or a page is sufficient. So you can write the answer in paragraph form or in point form, whichever way is convenient to you, or whichever way is more suitable depending upon the requirements or demands of the question. And also take care to see that, say if a question carries 4 marks, then you just can't uh, stop its answer in one line. Obviously the paper setter has something in his mind that he has allotted 4 marks to this question. So obviously you need to analyze the situation and correlate it with the requirements it is asking, and then reach the conclusion. So this is the way you have to write the answer. So see, first of all, state what the situation is about. Just give one reference to it, and then state the reason, and then give your conclusion. Yes, is that clear? So anyway, Tejaswin, we shall be doing descriptive questions also on Thursday. Yes, any query, students? Again, or otherwise, we are going to wind up the session. Okay, no query. So have a great time, students. Thank you. Thank you for listening, and come in great numbers on Thursday for question answer session, and for one remaining topic, that is cash and cash equivalents, audit procedures in respect of cash and cash equivalents. So see you on Thursday, guys. Thank you. Yes.